Welcome to today's video. Today we'll be covering the accounting equation. This is very important and pretty much embeds a great foundation for accounting, and if you can understand today's lesson, then a lot of things that going forward in your journey of accounting, it'll be a lot easier if you're able to learn today's principles and the ideas behind today's lesson of the accounting equation. Alright, so we talked about in the previous video about assets, liabilities, owner's equity, and mainly about classification. Alright, we didn't specifically mention assets, liabilities, and owner's equity because they tend to be accounting jargon. However, this is the way that we can classify and group things together, so that way it is easier to understand and we can all speak the language of accounting, which is also the language of business. Alright, so we have assets. Assets could be a lot of different things. You could have cash, you could have buildings, but I like to think of it first as items that have future worth and value to the company. So like I said, we could say it's cash, could be buildings, it could be cars and trucks, we'll call that vehicles. Alright, it could also be stocks if they have investments. Alright, you get the picture. But instead of memorizing every type of asset for every type of industry, which could be exhausting and confusing in the beginning, I like to think of it just that if they have future worth and value. So if you look at an item and you think this will have future worth or value to the company, then it's an asset. We also have liabilities. Alright, these are kind of the flip side of assets, and these are items that have future cost to the company. You can think of it as, do I have to pay something? Alright, so do I have an accounts payable? Alright, maybe there's a bonds payable. Maybe I have to pay off a bank loan coming due soon, or maybe I have a long-term bank loan. Whatever the case may be, these are all items that you look at and say, one day, maybe not today, but in the future, the company will have to pay out and for this liability, and this will be a value leaving the company, because to pay it off, they'll have to pay it off in cash or something like that that will cause it to be a future cost. And lastly, we have owner's equity, and this is just the owner's claims on the company. So you've got a company that generates revenue, they have expenses, and in the end they get profit, and they try to pay off their liabilities with this profit and other items. So after paying off all their liabilities with their various assets and earnings, owner's equity is what's left over. So the owner's equity, if it's a private corporation, it's going to be the owners. If it's a public corporation, then this amount belongs to whoever owns the company's stock and things like that. So I mentioned assets, liabilities, and owner's equity, and they form what we call the accounting equation. And just like in elementary math, alright, we have to balance this equation. So right now we see that assets equals liabilities plus owner's equity. This has to remain the same. They always have to equal in accounting. Alright, so if at the end of the day you find out your accounting equation does not balance, then it's going to be a rough life for you in accounting. But after you do items and you do journal entries, like we're going to get to eventually, and you balance, trust me, there's no better feeling in the world of accounting than to have your items balanced. So this being said, I mentioned that this is an equation. So whatever happens to one side of the equation has to happen to on the other side of this equal sign. Which means if your assets went up, then either your liabilities went up or your owner's equity went up. Or it could be a combination of both depending on what it is the transactions are talking about. Alright? Likewise, if your assets went down, then either your liabilities went down or your owner's equity went down. Okay, so whatever happens to one side happens to the other. Although we may have some transactions that affect only one side. So maybe you have an asset that increases while at the same time you have an asset that decreases. So this is still fine because we are balancing with our equation. It's just that all the action has happened on one side of this transaction or the equation rather than affecting both sides. Alright, so I would definitely say this is absolutely imperative to know. If you do not know the accounting equation, it will be a rough life for you in accounting moving on. Alright, so we have seen an equation, so let's just apply a few basic math principles to show an alternate equation that will also help you in accounting. So remember when we were in elementary school, middle school, whatever the case may be, where we did this math, where if we have something on the right side of the equal sign, we can put it on the left side by subtracting it from the sides, from each side. That's exactly what we can do here. So by subtracting liabilities from the right side and subtracting it from the left side, we get assets minus liabilities equals owner's equity. Alright, same numbers. All I did was just apply a few basic math principles, and now we have owner's equity equaling assets minus liabilities. Okay? Another word for this, these assets minus liabilities, is net assets. In accounting, net just means that you've taken something out of another thing. So therefore, net assets just means that we've taken something out of the assets. And what is it that we've taken out? We've taken out liabilities. Alright? So net assets equals owner's equity. Alright? Just abbreviated it. Alright, so net assets equals owner's equity. That's another thing that you need to remember as you progress through accounting because it will help make things easier. Alright, so now let's get into some examples. Alright, so a lot of accounting is word problems that you need to then look at, pick apart, and decipher the important information that you then can use for accounting and to record what's actually happened. Alright, so we've got Fred, a new business owner, buys a building for $14,000 in order to operate his new business. Alright, so let's set it up by putting the accounting equation, and then we can just show what's happened. Alright, so a new business owner, okay, he bought what? Alright, so let's find the important information. He bought a building, and it was $14,000. Okay, in accounting, if it doesn't say that he paid cash, alright, and it just shows a dollar sign with the amount, that has the exact same meaning because you can't pay anything other than cash. So if it was $14,000, you paid cash. There's no other way you could pay it, alright? So if you see paid cash or just the $14,000 or the amount with the dollar sign, that has the same thing as saying paid cash. Okay, so we had an asset that increased, right? Because a building has future worth to the company. And at the same time, he paid cash for it. So this is one of those examples where you had assets increase and decrease, and our liabilities and owner's equity had no change. Okay. And then if we were to put in the amounts, we would know that if we paid cash for $14,000, then the building would now become worth $14,000 in our books. We'll get into more of that later, but the biggest thing is just to know how this affects the accounting equation, and that is that you had an asset increase, which is the building, and you had an asset decrease, which is the cash. Alright, and we have another example. Alright, so same guy, Fred, he's forming his new business. It looks like he also has borrowed $50,000 from the bank in the form of a bank note in order to help fund his new business. So, same thing, I encourage you, until this becomes something that you can do without thinking about, always set up the accounting equation, because the more times you write this down on your paper, the more it will reinforce it in your mind, and the better it is that it will stick and that you will remember it for tests or for when you're working with accounting or whatever it is that you're doing with accounting. So let's pick out the important stuff. Alright, $50,000, that seems pretty important. And we've got a bank note. Alright, so that's the other very important piece of information that we need to derive from this problem. Alright, so he borrowed $50,000. So what happens when you borrow money from the bank? Well, you go in, you sign a note, you sign some type of agreement that says you're going to repay this to the bank, and in return the bank will give you $50,000 for this example. That's what happened. So we had an asset increase, right, because we got cash of $50,000, and then we know what happens to one side has to happen to the other side, and we know that the bank note has increased our liabilities, right? Because liabilities are where your creditors are going to be, and your owner's equity, like the name suggests, will be where your owner's accounts are. Alright? So this is very important. Do not confuse creditors with owners, because that will determine where you classify this in accounting. Alright, and so we're still balancing, we're good. What's happened to one side, increase, has happened to the other, increase. And of course we will get into this later, but for right now we can see that $50,000 would be the amount of this. And our third example, and I believe this is the final example for this lesson, is that Fred, same guy, still starting his new business, sells $16,000 worth of stock to his friend Amy in order to help fund his new business. Again, accounting equation. If this gets old to write, good, because that means you are learning it and you are reinforcing it in your mind, which will help you be successful and remember this later on. So let's pick out the important pieces. So what is the important piece? Okay, so if you said the 16,000 is important, you are absolutely right, because in accounting we're all about the numbers, so that was the easy one. Now what's the second very important piece of information? It's this word right here, stock. Okay, that signals to us that by selling stock to his friend Amy, Fred is selling part of his business, and therefore Amy becomes an owner of the new business. And remember, we said where does the owner's amounts go? And that would be an owner's equity. Okay, so when Fred sells Amy the stock, she's going to give him the cash to help fund his business. And as a result, the owner's account, what Amy owns in the business, will go up. Alright? What's happened to one side of the equal sign must happen to the other. We both had an increase. Alright? Therefore, we're still balancing and life is still good here in accounting. Now, if you wanted to also put in the amounts, you could put in the 16,000 cash, 16,000 stock. That would be the amount of her worth of the company. And therefore, we would still be able to see and classify everything that has happened. Alright, so let's recap from today's lesson. First of all, we learned that assets, liabilities, and owner's equity make up the accounting equation. Alright, and we also learned that the accounting equation is assets equals liabilities plus owner's equity. Alright, we also learned that business events can increase or decrease the accounting equation, but that just remember, whatever happens to one side of the accounting equation, say if we had a assets increase, we would have to have liabilities, owner's equity, or a combination of both increasing, so that way the equation still remains equal. Alright, and that leads me into our third point, is that the accounting equation must always balance. If nothing else, be sure to take this away from today's lesson, because just by knowing that these things have to balance will be able to have you catch a lot of errors that you might make later on. Because if you say, well, all of this has to balance and mine doesn't balance, then you know right away, before submitting any papers or work or whatever the case may be, you know you'll have to go back and make sure they balance, see what's wrong, why do they not balance. So most important from today is definitely number 3. Alright, so that's all for today. If you really enjoyed the examples and you want to see more, I can create a video that showcases many more examples, more combinations of examples, as well as maybe the higher difficulty of those examples. So just email me and I'll be happy to create another video for you in order so you can learn about the accounting equation. Alright, so hopefully this helped, and I look forward to doing more videos, and look for my other videos coming soon. Thank you, and have a great day.